Okay. Hi, my name is Sergey Savastyuk. I have a PhD in applied mathematics, and I used to teach at Santa Clara University, being expert in AI and game theory. Then I started a few companies in Santa Clara County, actually in Silicon Valley. And now I'm leading Tickeron. And today I'm going to be talking about pair trading with AI robots. Okay. So let me tell you a few words about Tickeron. So Tickeron is SEC registered company. And there is a big difference between the companies which are registered, which are not. Those which are not registered can get into trouble. For instance, here is a lawsuit against Online Trading Academy. So they've been sued for deceiving consumers for years. So they were selling their courses, and pretty much the claim is they deceived quite a lot of people. And there's a settlement, about 5 to 9 million, 10 million settlement, okay? So this company was not SEC registered, and that's where the problem was. And then if you want to find out if a company is registered, you have to find ADV Part 2, Form ADV Part 2 in the legal documents, where you're going to find a lot of disclaimers. And in case of, for instance, Betterment, Form ADV Part 2, so that means Betterment is registered with the SEC. Tickeron is registered with the SEC, and it means we cannot sell you any BS as other companies can do, okay? So after this type of disclaimers, let's start talking about AI algorithms. Quite a lot of trades made by algorithms, and that's the reason you really come to this type of webcasts. And I will talk today about pair trading, okay? And here's one thing I found in one of the similar presentations when the people talk how to trade. So they say, try to become as robotic as possible when trading, okay? So then what's really the point of person to become robotic when we can create robots for that purpose? And that's what we do at Tickeron, okay? So today I will talk about pair trading, and primarily two steps are involved. Step one, find correlated pairs and find real-time gaps, make a trade and make an exit, okay? So then I will show you how our AI robots in pair trading work. And if there is interest, I can talk about gap traders, which is quite a different theory, but similar, but not quite, okay? So pair trading. Pair trading is not what we invented. It's been known. And the question is simply how much work a user has to do from different type of softwares. In our case, it's pretty much nothing one can do, just follow the signals, okay? I did read this book a long time ago. That's where I got interested in the pair trading. Here is a good example that ETFs have a really high correlation with their underlying securities and their holdings, okay? So what is a pair trading? Definition, okay? So pair trading consists primarily of three major steps, which is to find correlated pairs, okay? So you want to find two securities which are highly correlated. Then, when you found all the pairs you want to trade, then you want to find the entry point, okay? So the step number two consists of the moment when there is some kind of a gap between them, and then you buy one position and sell another. That way, a market neutral position is created. And then when this gap goes to almost zero, then you exit, okay? So you see the securities return the historical correlation. So here's the correlation is broken, and then it returns, okay? Let me then show you how it works, okay? So let's talk about step number one, okay? It is quite a task to find correlated pairs, and it does involve quite a lot of math and calculations, okay? Let me show you the way the correlated pairs behave. Okay, let's take a Ford and General Motors. The typical correlation is 80%. And what it means it's almost like 80% of the time they move in parallel, even though their price might be different, but they move in parallel, you see. And then the benefit of this is follows. Let's assume Ford is sold short and General Motors has a long position, okay? So that means Ford is short, General Motors is long, okay? Now, let's assume that tomorrow the market drops 15%, okay? So what it means for the green line, General Motors is going to lose, let's say 15% too. The market drop, some kind of event happened, and then if they're correlated, then the Ford supposed to drop also 15%. But the Ford is sold short, so that means Ford is going to gain 50%, and then General Motors is going to lose 15%. And as you can see, if the gap is the same, then the total P&L at this moment is going to be zero, okay? So that's where a benefit of working with pairs, it means it creates market neutral, market goes up, market goes down, and then you actually get nothing in your account, it's a zero, okay? So then the question is, what's the point, right? So we're going to discuss the point, but let's look at other examples. You see, they say Ford and General Motors. When you look at this chart, and if you look at the support resistance lines, and as you can see, so you pretty much don't see the difference. They all the time moving in parallel, even though you see this price is between 9 and 4. This is between, let's say, 37 and about 17, okay? So you see, they kind of look the same, and that's what is the point is, okay? So let's assume we found quite a lot of correlated pairs, and by the way, in order to find correlated pairs, you can do the following. Let's say I went here, I typed here Wells Fargo, okay, and then I'm gonna get here a page, the ticker page on our website. And what is interesting, we're already having this correlation pre-calculated. So this is Wells Fargo. As you can see today, it gained 2.3%, okay? So you go to this right side, and I will talk about this blue field when we might talk about not the pair trading, but the gap trading. But the pair trading is right here. You see, Wells Fargo and stocks correlated, and the price changes, okay? So you see, Wells Fargo correlated to Wells Fargo 100%. That means we don't care, and they change it 2.8%, right? But look, USB is actually correlated to 90%. That means it's a 90% of the time it is moving in a parallel manner. But here, as example, is minus 0.4, it is plus. So that means they did not move in parallel, right, for today. And that's a good example where you can find a pair, right? So this is a manual search for the pair if you don't want to subscribe for the robot, right? So then what you see here, you can really read a lot about two stocks, okay? And then make a paper trade. So for instance, you can click here and then now, you remember that USB went down and Wells Fargo went up, right? So what is the deal? What it should be? So Wells Fargo went up, so that means it must be short, and USB went down, must be long. So that means whatever went up is shorted, and this one is going to be long, okay? So, and then you can place an order. I'll just go ahead and do that, okay? And now this recorded, and it is going to be executed tomorrow when the market is going to open. So now, you see, I showed you an example how to find. I kind of jumped ahead, but the idea of a step 2 is what? I just showed you. You see, there's a potential gaps. When Ford moves all the time in parallel, then all of a sudden there's a gap. Like we discovered almost 3% gap, more than 3% gap, when it was supposed to be very small gap, which could be very small and negligible. But today it happened that, let's say, Wells Fargo and USB created this type of gap. So what it means that gap, according to their overall correlation, is supposed to be closed. So that means whatever the gap is here, 3%, it's yours, it's your money. So if you go to Wells Fargo loan and USB short, then you can make 3%, okay? So that's the way it works. And what you do on the step 2, you find this gap in real time and enter in this particular moment. And then after that, you can exit when you see the gains, okay? Let's look at the examples. The same Ford and General Motors. Sometimes these gaps you can find very rarely and sometimes not, okay? It depends on the time frame. In this example, it doesn't give us quite a lot of trades, but they are quite visible. So for instance, you see it's been pretty much once a year, big gaps accumulated. I took that picture. Also Ford, you see, versus General Motors. It was a real picture. You see, this is a huge gap. You see small gaps, right? And then all of a sudden it's a big gap, okay? So then software and algorithms are supposed to find that gap and say, okay, buy this one and short this one and wait until it's going to close. And you kind of wait and exit here. So in this example, you have to wait quite a long time, but then you can really load quite a lot of money into these companies. And then with a market neutral position, you really don't worry about your account because it's not going to move that much. It's going to be just generating gains because it's closing the gap. So you close the gap right here, you exit from both positions, and then wait for another gap. You see this one more gap was identified and then closed here, another gap, closed here and another gap, and so on, okay? So what I used to trade, I remember like a clock, it was Wells Fargo versus Bank of America every day, and then you enter position, next day you exit positions, and then you keep making money, okay? So let's look at another example. It's a good example. You see Coca-Cola, and I'm sorry, this is a Pepsi-Cola, right? Then you see here, obviously, you might guess that businesses are Coca-Cola, Pepsi-Cola, Ford, General Motors. That's how you find those pairs, right? That's how we find them. For instance, we can go ahead and see what is the correlation of Coca-Cola, and in reality, what's the correlation to the Pepsi Cola? Let's look at that. So this is a page, as you can see. Today, Coca-Cola lost lost about 1.83%, and Pepsi Cola 78%. It's not high correlation, but you see both of them lost, but the Pepsi Cola lost less. Okay, so that means this one is underperforming, should be bought, and then Pepsi Cola is overperforming, should be sold short. And if they go both go down, so that sooner or later Pepsi Cola is going to catch up going down. That's the way it's working. Okay. So here is also example, and as you can see, the time frame is different. Here is the just the day, right? Day starts, day ends, and that's where the computer finds in real time this gap. And you can see it takes a few hours to close that gap. And that suggests that robots are really important in the pair trading, because you have to constantly check and recheck correlation and see if the pair is still valid. And then you have to find that gap and then enter. And you can enter, you have enough time, but the computer is the one which is supposed to find that gap. Okay. So now let's look at the robots. Okay. So the way you find these robots is follows. Okay, you go to trading AI robots, and then you get to this page, which is the page where you see all our robots. And it's very easy to understand. So for instance, this is the name, day trader, based on the particular technology, RTP. It's real-time patterns, and that's for cryptos. Okay. Trailing trader stocks between 5 and 20. It's based on another technology with trailing stops. Okay. This is gap trader. If I have time, then I will talk about them too, very briefly. Swing trader, for those who really want to stay long. Swing trader, another swing trader, and let's say pair trader for regional banks. And this is another pair trader for technology industry and services. Okay, let's look at the this robot and then view details. Okay, and this is a description. As you can see, it exactly described what I just told you guys, and examples with correlation and brief description. It does say that it takes the stocks with high liquidity, about 10 billions and more. Every time we enter a position at 10,000, okay? And let's click it here. And now we see this is a profit line it's a net profit. This is closed positions, okay? So it's been trading live 78 days without human intervention. And let's look at the performance. So here is the thing. So annualized P&L is 48%, which is not bad, okay? Then maximum open position 31. Then average duration is 4 days, okay? 4 days. So that means every 4 days robot closes, and this the guessing game 68%, guessing right 58%. That's the reason you generate the profit. Okay. So let's see what is the today. Today is 14th. You see, it did open today a couple of trades. One made $30 and another about $1. And let's look how it was performing. Okay, you see, you split, and then you see one is positive, another negative. Okay, you see, this is both positive. What it means, you see, that one is going up, making gain, and sure, it's also the kind of closing both, which is a really good one. Okay, so let's look at this one. So you see, they went both, right? So this one is low, so that means kind of market went down, but it's a good example. So both of them went down, but overall you have a gain, right? You see, it's still almost 0.3% of a gain since yesterday. Okay, if typically that's what people get paid these days for a year, right? And so on, okay? So these are open positions. And now let's look at the closed positions and then see what happens, okay? So these are the trades, real trades been closed like these ones yesterday, okay? The trade was 22 hours total and made about 2%, okay? So let me open that one. Very good. You see, it made both ways. It did create a gain on a short position and created a gain on a long position. Okay, this one is you see that one was gain on a short and a small loss on another one. Okay. Let's look at that one. It's also okay. You see, it's both gains. Okay, so it's not bad actually. Out of so many trades, so you can keep reviewing this and really get confidence how it works. You see, it's a green, green, green. It's very few reds, and if the red is small. Okay. So how you work with the AI robots, okay? You can open this position by clicking, and then what's going to happen, let me look, okay. So for instance, I like that one because it accumulated additional gap. And so that means when you see red in open position, it's not bad actually. It tells us that it accumulated additional loss, okay, and then I'm going to open. So what's going to happen is success, and then we are going to see, let's refresh the page. Yeah, so these trades are going to be executed at the time when the market is going to open, okay? You see, this is a pending, and we're going to see that executed one more time, and is going to be recorded in my paper trades, okay? So let's look at my paper trades, see what I have. Okay. So as you can see, I kind of been trading almost 300 days. My annualized P&L 65%. You see, my average duration is 7 days. A guessing game looks like good on the long position, not so good on short positions. Gain pretty much equal to the loss, but because my guessing game is good, I'm making money. Okay, and that's where you will see these pending orders. Remember, I sent, you see Wells Fargo USB and this one, right? So all of them went to the pending orders. If the market would be open, then they would have been executed immediately on the paper trades, and you're going to be able to see their performance live, okay? So this is our robot. And then, as you can see, this one is pending. And as soon as it's executed, you're going to be able to see the performance of this pair right here. And then when the robot is going to close, then this line is going to stay the same, meaning it's going to stay until you're going to close that position, because now robot remembers that you used this one, and then you have to really know when the robot is going to exit, and that's when it's going to be said to you, okay? So what else you can do? Enable notifications, you see, enable or disable notifications. That's very important. That way you're going to be able to receive emails or push notifications. Okay, this is the, again, short description, which we've seen, okay? And all kinds of other statistics for the closed trades. You can find the percentages, the drawdowns, maximum drawdowns, and the profit to drawdown ratio, which is good. Okay. So you guys, do you have any questions about that one? No, okay. So now let me explain how to subscribe to this type of robots, okay? So as I said, our robots are based on a different type of technology. So real-time patterns, pattern search engine, trend predictions engine, you see pair trading, gap trading, all kinds of combinations, okay? So what you can do is always review closed trades, okay? So you can always come, register, and review closed trades, okay? Off market hours, you can always review open trades and closed trades, okay? But during market hours, you are going to be able to follow the number of robots, those equal to the bundles you bought. It could be 1, 2, or any. So if you buy 3 bundles, then you can follow any number of robots. If you buy 1, then you can follow 1, but you can always switch. So for instance, if you follow 1 robot, you don't like it, you can switch at any time. If you follow 2 robots you bought, meaning 2 bundles, then you can follow 2 robots at any time. If you bought 3, you can follow any robots, okay? So that's the way it works. So 1 bundle, when you buy 1 bundle, then you actually get $60 credit per month for other products, okay? So let me show you how it works, okay? So I'm gonna click here on premium. And now I am on this page, okay? So I'm gonna go here and let's say I'm gonna click all of them. Okay, I see there's some questions. Okay, so let's assume I'm gonna buy 1 bundle. Okay, you see you get 60%. So let's assume you are interested in other products, let's say pattern search engine and trend prediction engine. So you see 90, and then you still have the same 90. So you get these 2 products for free, okay? And that's a major point here. It's a good question. So I got a question whether or not I can trade SPY and Apple, okay, GLD and let's say Bank of America. You know, it's a good question, but I would never recommend to trade SPY and Apple because I really doubt they're well correlated or highly correlated. The same thing, GLD and Bank of America. So what we do when I explain to you guys that we do not provide pairs which we believe are not good, okay? So when we go to this step, number 1, right? So find correlated pairs. If we believe that pair is not highly correlated, then we do not give this pair, end of day, okay? If you want to trade regardless, trade but by themselves. Oh, okay. So if you want to trade not pair but by themselves, then it's a kind of different story, not pair trading. There are different stuff we have. So for instance, CocaCola, we give a signal sell, okay, based on all the information we have, and that's where you get an opportunity to view that when you have it. Let me see here. So for instance, you uncheck. So if you get one annual really subscription for $39, you get these buy sell recommendations. And then if you want to trade, depending how you want to trade, you see it's robots and then engines. So we have real-time patterns based on real-time and end of day pattern search engine, trend prediction engines, and then all these engines and the robots, okay? So if you want to analyze other robots, okay? So you have to select a robot, okay? Because we do not trade those securities which are not suitable for our algorithm. Why? Because we do quite a lot of back testing, and at the same time, you can do that. Let me show you how it can be done. Let's assume you wanna do, let's say, this robot, okay? So let's see what is based on and whether or not you can add. You see, this one is doing really well. Okay, so you want to add Apple. Okay, so what you can do is go here and see if Apple is available for this robot, and then you can customize. Okay, so you see it is 231 positions being traded by this robot, and now out of 4,500 almost. Okay, so let's look AAPL, right? Okay, cool. So you see, you click here. Now you have 232, and now this robot is going to be trading AAPL. Okay. The question was about Spider and JLD. We're working right now to add robots which are going to consume ETFs. Right now, all our robots for stocks and cryptocurrencies and Forex and ETFs we have not released yet. Okay, so we do not have ETFs, people asking, and we're going to be adding them pretty much soon, and you're going to be able to switch or add whatever is related. Okay, so my answer to a question is as follows. If you like a robot and you want to add another position, you pretty much can do that. Even though it is a stock less than $20, you can add Apple, and you're going to get a signal based on these technologies. No open positions here yet. Okay. 633. I don't know if you're interested in the gap trading. It's actually quite a sophisticated technology. So we're here. It is a group trend analysis. It's only our company has it and provides that. It's coming out of my observations of trading gaps in the classical sense. Let's say end of day price, then goes down, and quite a lot of people expecting the gap is going to close, but no, some of the gaps actually going down and some of the gaps can close. So I was wondering what's really moving them up and what's really moving them down, right? And the idea is to analyze the herd mentality. So that means where's the herd, where that group goes, okay? So if, let's say, I know that the it is the highly correlated group, right? So then I can trade that one because I know there is a gap. If I define that gap, then I'm going to be able to join that group and close the gap and make the money, right? So that's how the gap robots being created. And then you can look at their performance. They're doing not bad either. You see, this is a gap trader. So that means it finds highly correlated groups. And by the way, we present them here. So for instance, you see it's a group of too big to fail. All the banks too big to fail, all of them 92% correlated to Wells Fargo. And as you can see, it's a small gap. It's 2.8%, 1.3. It's 1.5% gap. Highly correlated stocks. This is not all highly. This is all highly correlated stocks out of that list. This is the list, right? So we put them into the group, and we believe it is a small herd, right? So we say, okay, 1.8 and 2.8. It's 1% gap. Maybe not that big, but that's how we discover those gaps. And moving forward, okay. So let me go back to the robots. Okay, so this is the gap trader. Is it a gap trader? No, it's a day trader. Let me. Okay, there's something. Okay. So where am I? It's here, gap trader. Let's open this one. Okay, you see it describes exactly what I said. It tells the size of the gap, 4%, trying to find 4% gap. So as you can see, it's doing not bad, 59% annualized return. And then this is the closed trades. Let's look how it's doing. You see, it's quite a lot of greens. Made 3%. 3%, almost 4%, almost 5%. And you see, it's doing really well. I like that engine, okay, which works for us. Okay, so as you can see here, the same thing. In order to use, you see, if you want to trade, let's say here Intel, right, and you want to trade Apple with a gap, you have to go here and see if this robot is adjusted and really works well with Apple. If you find Apple here, you can add. And if you find Bank of America here, you can find that, put it here too, okay? Maybe I opened too many pages. Let me close them. Okay. Okay, yeah, you see it opened. So you see it has 146 out of 2,700. Let's see, Apple, AAPL, AAPL, right? So you see, yeah, you add Apple, and now Apple is going to be watched by this technology gap trading, okay? What else? There was the Bank of America. So go here, B Bank of America, BAC, yes, add, and now you're going to be trading Bank of America by different robots, by the way. So one is based on for search of patterns. This one is based on the gap trading. Another would be pair trading. As I said, in order to trade GLD and SPY, then you have to guys wait for the robots tuned for the ETFs, okay? So that actually ends my presentation. And if you have any questions, please ask me now. Hopefully you understand this technology, okay? Okay, something wrong. Hopefully everything is fine with this. Yeah, okay. So if you don't have any questions, then I'm gonna be okay. Hopefully everything is fine. And then, oh, maybe I'm not sure. Do I share the screen? Hopefully I did. Yeah, I have to check that video. Hopefully I didn't click on the wrong button. Okay, guys, I'm gonna be closing this presentation and good night. Okay, bye-bye.